we went overweight China in early March, and we increased that overweight further since then. And it is going through the most dramatic period of outperformance versus the broad EM indices that we've seen in a very long time. And the reason that it's achieving that is a stronger sovereign balance sheet. And that's particularly limiting currency downside compared to what we're getting elsewhere. Also, the sector skew is quite advantageous. As we go through this event, what we're clearly seeing is that some sectors are more advantaged, most notably sort of e-commerce, internet-related, and IT hardware. And those are quite heavily weighted in the China market. And in addition, I think the first in, first out aspect of COVID virus suppression is something that's been advantageous for China. It's not unique in that regard. Some of the other markets that we cover also have done much better than their peers in Europe and US on that regard, most notably Korea.
But this just makes me wonder if many places in Asia that you're tracking, whether or not you worry about a second wave, an uptick in cases from here, and how that's impacting your investment strategy.
Yes, the bottom line is we are concerned, and what China achieved was achieved with very strict isolation measures and quarantining. Korea's strategy was built more around testing. Both Korea and China use technology more aggressively than other countries. So when we actually look at the situation in China, it's quite unlikely that it will be replicated in terms of that snapback. And even within China, if you look at discretionary consumer activity, it's still significantly down year on last year, whereas like core industrial production, coal consumption and things like that have largely normalized.
I also want to broaden out and touch upon your views on some other regional players. So you are going slightly overweight on India, even though your economists have downgraded growth for the region. You're also being a little more optimistic about how Singapore will act as a defensive safe haven versus other ASEAN nations. Could you walk us through what specifically do you like in these markets?
Well, I'll take Singapore first. I think, again, that's an example of this sovereign balance sheet strength that we've been emphasizing, and therefore less downside risk in the Singapore dollar than exists the region broadly. It's also, the sector skew isn't the same as China's, but it does have a large number of sustainable yield names in it, which obviously, given where 10-year yields are, is quite an attractive proposition. I think for India, it's really that valuations are undershot relative to the rest of EM and the precipitous declines the market had. So some of the growth sectors in India, like the private banks, reached exceptionally low valuations relative to peers. There are also, of course, dollar earners in terms of IT outsourcing names and generic pharma names. And the IT outsourcing names in particular are actually in a reasonably good position in this macro environment that we have right now. So both of those are much smaller overweights than our overweight on China, but we certainly think they're worthy of consideration.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.